Good afternoon, everyone. In today's video, I'd like to do a bit of a sector breakdown as we enter a new month, June 2021. We had some pretty strong signals here of two different ETFs which were weaker than their counterparts, along with one ETF which was stronger than its counterpart. Now to start off here on the left-hand side, I have the major ETFs listed. On our strong side here, we had XLE, the energy ETF, up 3.85%. So most definitively, the strongest ETF. We had a lot of stocks in the energy sector hit our short volatility zones. On the other side, we had two ETFs which stood out in terms of how weak they were today. And in one of those ETFs, we had a nice bounce. In the other, not so much. So the first there is XLV. XLV was the weaker one between the two that we'll talk about. The second one is XLP, which is consumer staples. Now inside of our healthcare ETF, we had a few different opportunities. So we had Abbott, we had Johnson & Johnson, and we had XLV as the major healthcare ETF. We'll talk about all three of those. In the consumer staples ETF, we had Procter & Gamble and Colgate Palmolive hit the Volatility Box Live Scanner, and we'll talk about those stocks on the flip side. Now, the way I've structured this video is first we'll start with the daily time frame chart, and then we'll go into the intraday volatility. Now, starting off with XLV here first, using our daily time frame chart, what should stand out is the first negative histogram bar here that we saw in the squeeze forming. Squeeze is still intact. We've even had a squeeze signal, but now we've had a pullback to the market pulse. We'll see if we get a little bit deeper considering we had a close below today, and that may lead to a bit of chop around in XLV, at least for the short term here. So that's one thing to keep in mind. XLV today was the weakest ETF, at least that we had come across. And if I come into a 1 minute time frame chart, you'll notice how that volatility translated into the marketplace. If I load in our stock volatility box levels here, you'll notice price action really out of the gate started falling down in the healthcare ETF. And from that point, we hit our volatility box entry zones. We had the edge signal, but we really didn't bounce from there. We had a good amount of chopping around sideways until buyers finally came in to drive price action up to our target, our T1, which is this gray dashed line. That was pretty much it. That's where the move started and stopped. And then we came right back down into our stock volatility box zones and closed inside to the point where this would be a trending down candidate for the next day, a bearish trending candidate. So that's XLV, the major ETF here. We were still able to hold our price levels and bounce from there. But now if you take a look at some of the major holdings inside, so let's say Abbott Laboratories, you'll notice the boxes here much different. We had substantially greater volatility inside of Abbott here, where price action hit our volatility box zones, continued to go outside of the aggressive into our conservative, and even continued to break outside of the conservative, really to tell us that there was a good amount of selling in Abbott Laboratories today, so much so that even to end the day here, we had bearish signals to close. So we'll see if that bearish activity continues tomorrow. The next one, Johnson & Johnson, very similar as well. Johnson & Johnson, we first hit our aggressive zones, just continue to keep going down. This was actually a stop out where we even had our oversold signals trigger. And so unlike the healthcare ETF here, Johnson & Johnson did not bounce from this level, which actually had a nice confluence with the 1272. So when something that you expect to happen doesn't happen, I would argue that that gives you more information, which in this case suggests that we expect more bearish activity to come for XLV, along with some of the major healthcare holding stocks. Now, if we switch gears to consumer staples here, consumer staples a little bit different here, at least when you compare the charts. XLV actually, or XLP, excuse me, let's come back to our daily time frame chart. In XLP, we're near the 1272, but for the most part, we're away from the market pulse. So we have a little bit more to go, and we have 1, 2, and 3 overbought signals here, all of which suggest that we may see a bit of short-term bearish activity down to maybe the 69.51 1272 level. That's really where I'd be looking at as our potential magnet that we may touch if we have any kind of volatility continue in the consumer staples market. Coming back into a 1 minute time frame chart here, very similar concept, this time towards the close, where price action finally fell into our volatility box zones. But unlike XLV here, that reaction came in very quickly. The buyers came right back in to buy price action up into the close, where from our volatility box zone into the final hour of the market, price action went up about 0.26%, which again, keep in mind, this is an ETF. That was fairly substantially hitting the T1 target really in what, 1, 2, 3, 4, and 5-ish minutes or so towards the close. So that was XLP. Now, if you break down some of the top stocks inside of XLP to see if we had similar strength, we have Procter & Gamble. Procter & Gamble hit our stock volatility box levels a little bit earlier in the day. From there, we had a bounce up. Similar to XLV, we closed really inside of our cloud, suggesting more bearish activity here. And then finally, the last stock we'll take a look at is Colgate Palm Olive, where you did not see that same sort of bounce. Here, we didn't really have our rules met with price action giving us the edge signal, but price just continued to keep going down lower. In fact, if I actually load in our conservative levels here, then you can see that price action here hit our conservative volatility box, and this was similar to the XLV movement where we chopped around sideways, had a lot of oversold signals here, but that didn't really translate into real substantial buying from actual people in the marketplace. Rather, sellers just continue to keep driving price action down lower. So in terms of ETFs here that are weaker to start off June out of the gate, that would be XLP, XLV. XLV to me definitely looks a bit weaker when you compare some of the top holdings inside and how they were reacting to the volatility that we saw today, how much the sellers were actually coming in and bringing price action down lower, compared to something like, say, XLP, which while still weak, showed a little bit less relative weakness. You can also see that translated pretty clearly with the percent change, where XLV was down 1.64% compared to XLP, which was down 0.34% for the day. So that's really how I would read the markets to start off. XLE, very clearly the strong one out of the gate today for June 2021. XLV, XLP were the two that stood out in terms of volatility, the top holdings, along with patterns that we're used to seeing and using that information to try and translate into something we can use. All right, I hope this video was helpful. Take care, everyone. I hope you have a fantastic June ahead, and we'll see you in the next update.